Bitcoin fell to 110,000, Ethereum ETF attracted a lot of money, and the copycat market was in full swing. Is the rhythm of the bull market about to change? From 76% to an invisible 21%. Does China still hold the future of Bitcoin computing power? Before the ink on the contract was dry, Booker bought 6,000 Bitcoins, betting $1 billion on his holdings and openly playing a trick on the IMF. The US employment data was slashed. Trump angrily fired the director, and blockchain became the last fig leaf? USDT enters the game with Bitcoin. Is the RGB protocol going to turn digital gold bars into payment infrastructure?
Friday, August 29th, BitcoinTV English channel. Where is the coin chain? I'm Michael, starting with the 24-hour cryptocurrency headlines. Bitcoin plummeted to $110,000, but investors retreated faster than anyone else, pulling in billions. In just 4 days, Bitcoin ETFs attracted $5.675 billion. Ethereum was even more aggressive, pulling in $12.451 billion. The sheer volume of buying pressure crushed Bitcoin. Why? Simple. On the one hand, the probability of a September interest rate cut soared to 82.9%, signaling a shift in monetary policy. On the other hand, the previous sell-off was so severe that investors rushed to buy positions at a low point. While the market is still languishing at $110,000, smart money has made it clear they are not going anywhere, they're going all in. Ethereum in particular saw ETF inflows double that of Bitcoin, surging market confidence. If a rate cut were to materialize, BTC and ETH would likely launch a massive rally together. Bitcoin's market cycle is entering a new phase. How can we tell? Just look at the realized market capitalization, realized cap. The percentage of UTXOs that haven't been moved in a year. This metric has been very accurate in the past. During the two bull markets of 2017 and 2021, once it peaked, the price followed suit, and then the percentage dropped rapidly, indicating a frenzy of long-term holdings immediately turning bearish. But this time is different. The current proportion of long-term holders remains high, but the upward slope has slowed, with the cycle clearly being stretched by ETFs and institutional funds. Coupled with the fact that some countries have begun to accept Bitcoin, the liquidity structure has completely changed. Funds have begun to flow from Bitcoin to altcoins, somewhat diluting the momentum. From a macro perspective, the probability of an interest rate cut in September is incredibly high. If altcoin spot ETFs are approved in October, the influx of funds will be completely opened up. In the short term, there will still be consolidation and turnover, but in the medium term, from this autumn to winter, there may be a direct takeoff. Of course, there are risks. If long-term holders suddenly dump their holdings, it may signal an early peak. Otherwise, the current volatility may be a good opportunity to ambush the next peak. Recently, altcoins seem to be on a tear, with the CMC Altcoin Seasonal Index soaring to 58 out of 100, officially entering altcoin season. The meaning is simple. Over the past 90 days, most altcoins have outperformed Bitcoin. The index has climbed continuously from 38 to 48 to 58 within a month. Funds are voting with their feet, moving into altcoins. Just look at these impressive gains. OKB is up 235%, Pengju is up 210%, CRO is up 189%, CFX is up 159%, Aero is up 139%, and ENA is up 125%. Mainstream coins like ETHLINK, UNI, and SOL have also seen significant gains. Bitcoin's dominance rate appears to have peaked, and the market is frantically spinning new narratives. Layer 2, AI, DFI, and exchange tokens have all become popular. You know the altcoin season. The returns are fantastic, but the roller coaster ride is even more intense. As long as Bitcoin can hold steady at $110,000, altcoins may see even more excitement. But remember, when the market takes off, the risks also increase. Please like and follow us for the latest developments in the cryptocurrency, blockchain, and mining circles within the next 24 hours. Click the bell to join our channel and become a member, receiving your membership code from Monday to Friday. The Asian Bitcoin Summit in Hong Kong has become a veritable crypto spring festival gala. Top Web3 players and institutional investors from around the world attended, filling the Hong Kong Convention and Exhibition Center with 15,000 people. The event, second only to Bitcoin 2025 in Las Vegas, was incredibly popular. BTV was the first Asian media outlet to be invited, and its host Michael joined MicroBT Marketing Director Wong Lai-te, Hashwale CEO Andy Wang, and the Miner Mag Research Director Zhao Wolfie for a roundtable discussion on the renaissance of Asian mining.
今天来讲，亚洲的复兴，心里面其实很多是滋味儿。我们曾经握有比特币非常大的算力，未来我会预见到，就是比特币的矿业会越来越规模化、集群化，大的公司、大的集团、大的资本会义无反顾的来布局啊，这是我能看到的。
In the early days of Bitcoin mining, China was the undisputed global leader in computing power. Cambridge University data shows that China controlled 65% to 75% of the global computing power from 2015 to 2017, reaching a high of 76% in September 2019. Sichuan's Dadu River contributes nearly half of the nation's computing power during its flood season, earning it the nickname, the world's mining capital. Inner Mongolia's thermal power plants roar day and night, demonstrating the undeniable truth that computing power equals power. Following the 2021 policy ban, China's official computing power share plummeted to 0%, but it quickly rebounded with invisible mining. According to Cambridge University data from 2022, China still accounted for 21.1% of global computing power, second only to the United States. Michael pointed out that global computing power still relies on Chinese-made mining rigs, and that Chinese capital is behind overseas mining farms. This computing power long march may be continuing in a different way.
For 15 years, the most rigid rule in the Bitcoin community has been that hash power equals power. China has been the undisputed protagonist in this epic story. From its initial ignition by geeks to its once monopoly of 70% of global hash power, to the massive relocation of mining farms due to policy hurricanes, a hash power long march. While this topic is a heavy one for Michael, he remains adamant. Retail investors must not be excluded. A piece of the mining pie must remain. Across Asia today, Bitcoin is rapidly becoming a value anchor for businesses and individuals alike, with institutions in Japan, South Korea, Hong Kong, and Singapore eager to capitalize. By 2025 alone, the Asia-Pacific digital asset management market is projected to reach $300.4 million. Perhaps the next mining renaissance blockbuster will truly unfold in Asia. El Salvador's actions are a testament to their lip service, body honesty. When signing a $1.4 billion IMF loan agreement in 2024, the central bank governor and finance minister vowed, okay, no more Bitcoin purchases. However, even official documentation proved ineffective, with President Nayib Bukele immediately flaunting his new purchases on social media. The national wallet now holds 6,282 bitcoins, representing approximately $709 million. Even more interesting, Bukele recently took to the prediction platform Kalshi to capitalize on the hype, playing a classic I don't buy, but I really do game.
And then you have all of the problems with the current monetary systems. And the Bitcoin system is so perfect that I think it's going to be the future.
On the prediction platform Kalshi, betting on whether El Salvador's Bitcoin holdings would reach $1 billion by the end of 2025 was a hot topic. However, after President Nayib Bukele personally announced on the X platform stating, "I can now do the most interesting things," the odds jumped from 20% to 38%. Shortly thereafter, competing platform Polymarket followed suit with a similar prediction, giving it a 43% probability.
Since mid-August, the question, can El Salvador build $1 billion in Bitcoin, has been a hot topic on Kalshi. At the time, the odds were quite low, 24% by December and only 18% by November. Then, with Booker's intervention, the odds shot up to 38%. While the odds have now dropped back to 27% by November, they remain stable at 35% by December, demonstrating continued enthusiasm. The problem is, if this continues, El Salvador's feud with the IMF will be sealed. By buying Bitcoin despite the contract being written, it would be a public slap in the face of the IMF. If other countries follow suit, wouldn't the IMF's credibility be shattered? Then, El Salvador's hopes of leveraging the IMF for international financial cooperation would become increasingly difficult.
Chainlink works, PYT steals the show, GDP data is going to be put on the chain, do you dare to be more hardcore? Can Tether's $118 billion strategic return make Bitcoin take off?
This time, the US Bureau of Labor Statistics is in a true data farce. The Bureau of Labor Statistics suddenly slashed employment data, causing an uproar. Trump, enraged, slammed the table. The data has been manipulated, and immediately fired the Bureau's director, Erica McIntyre. This made the public even less trustworthy, and the government was humiliated. Desperate, they resorted to blockchain as their last resort. Since data is on the blockchain and cannot be altered, they used it to validate the data. Trump's previous calls for transparency were met with laughter, but this time, he seems to be serious about using blockchain to shore up his position.
Chainlink has been BEA. The first indicators selected as data sources for on-chain inclusion include GDP, the PCE price index, and final sales by private domestic purchasers, with more data to be added in the future. Furthermore, the U.S. Department of Commerce designated PYTH as the sole publisher of GDP data, highlighting its authority on core national economic indicators. These actions are key components of the Trump administration's Transparency Initiative.
The good news for our industry is that our industry clearly creates a lot of benefits for the U.S. economy, and those benefits have now become clear to the political sphere, to the legislative side, to the executive branch, to various regulators.
This U.S. move goes beyond simply moving data onto a blockchain. After Pyth was selected to release GDP data, its price skyrocketed by nearly 70% in a short period of time. Chainlink's link also stabilized at $25, having risen 61% since early August. While this may appear to be market speculation, it actually represents the first deep integration of national credit with blockchain infrastructure. Core economic indicators such as GDP and PCE are the foundation of government credibility. US data has long been subject to scrutiny due to delays, revisions, and manipulation. Now, with on-chain transparency, blockchain is being elevated to the stage of national data infrastructure. This represents a crucial transition from financial to institutional applications of blockchain. More notably, the US move has resonated globally. The Philippine Ministry of Finance, the UK Treasury, and the El Salvadoran Treasury are among the institutions exploring the possibility of putting public spending and macroeconomic data on the blockchain. Government-level blockchainization may become a new narrative, not only a boon for Web3, but also the beginning of a reshaping of traditional financial governance models. From a market perspective, the rise of Link and Pyth may be just the beginning. If more countries follow suit, The United States will no longer be a single point of experimentation, but will instead lead the way in setting global data transparency standards. Once this trend takes shape, the role of blockchain in global governance will be radically reassessed. Today, I'd like to tell you about a protocol called RGB. What exactly is RGB? Simply put, it's a smart plugin for Bitcoin. It allows Bitcoin to transcend its status as digital gold and become a truly stablecoin and NFT-enabled platform. Even better, it doesn't simply dump all data on-chain. Instead, it only stores key data in the ledger, while the rest is stored on the user's device. This saves money, effort, and privacy. It's no wonder that Tether CEO Paul Ardoino immediately approved the inclusion of RGB on USDT, fueling Bitcoin's momentum.
Tether, the leading stablecoin, announced it will issue USDT on the Bitcoin RGB protocol, a move seen as a strategic return. As early as 2014, Tether issued USDT through Bitcoin's Omni protocol, but this was gradually phased out due to high fees and low efficiency. Now, the RGB Protocol 0.11.1 mainnet has launched, utilizing a lightweight client-side verification plus Lightning Network model to enable low-cost, fast transfers while avoiding on-chain data bloat. Tether CEO Paulo Ardoino stated that Bitcoin should not only be a digital gold bar, but also possess a native lightweight, private and scalable stablecoin.
With the launch of the RGB protocol, USDT has returned to the Bitcoin network. For Tether, this is a crucial step in maintaining its $118 billion market capitalization and maintaining its position as the leading stablecoin. For Bitcoin, this not only adds new ways to play with payments and DeFi, but also potentially reshapes its position in global finance. Industry estimates suggest that if USDT usage on RGB reaches 5%, the scale of stablecoins on the Bitcoin chain could instantly exceed $5 billion, triggering a new wave of ecosystem enthusiasm. As more wallets and users connect, Bitcoin is gradually evolving from a simple digital gold bar to infrastructure for global payments and applications.
CMS FedWatch has released another update. The probability of a 25 basis point rate cut in September is as high as 86.2%, while the probability of no change is only 13.8%. In short, the market is essentially certain. Mr. Powell is definitely going to cut the knife this time. CoinLast's latest data reveals a surprising news story. In the past 24 hours alone, Binance has attracted 774 million USDT. This momentum is like capital rushing to the exchange on a high-speed train, and it feels like the market is already loaded and loaded. Bloomberg News broke the news that as long as mining companies are on Coinbase using Bitcoin as collateral, one can borrow money. Coinbase has also seized this opportunity to become the leading financial backer of the U.S. mining industry. Coinbase is clearly dominating the financial landscape of the Bitcoin mining industry. Its lively software development company Eliza Labs is suing Elon Musk, saying, "First you blocked my account, then you took my technology and created a copycat AI? This is too ruthless." Solana's meme coin Cope is on full steam, with its market capitalization exceeding $13 million, setting a new record high. Its daily trading volume reached 2,600. It's like, you keep asking for Cope and you can't stop buying it.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.